Hey everyone, John Henry here, Slingshot Futures Trading Group, SSFTG. Welcome to the video. In this one, we're actually going to be doing a members question from the Discord chat. And the question is flushes. What defines a flush? What does it mean when price flushes? What happens when it flushes back to a certain point of interest? How can we use this information? First of all, fantastic question. And really, a market flush can be a lot of different things, right? When we're talking about a market flush, generally speaking, when I'm talking a market flush, I'm talking a market that is breaking away from something, which is typically hunting for something else. So let's use that and kind of think about this for a second. A sideways range that is breaking out and hunting for something else. It could be a previous range, it could be a previous POC, it could be a previous high of day, it could be anything, but the market's hunting for an objective and breaking out of another. So if I were to look at something like this, what's going on right now with the NASDAQ? We've got a really nice sideways continuation and a rip to the upside. This would be the same thing as a flush, just the other way, right? Same thing here. We have a sideways consolidation and a market flush. Sideways consolidation, market flush. These are also what you could consider where the market has made a decision, really. We have the sideways consolidation. You've got the back and forth. This is where the decision has been made, and it's finally breaking out. Now, with this counter move, and this is for me what I like looking for in terms of flushes. Because remember, I like keeping the trend in my favor, generally, as much as I can. So if I'm looking to buy, I want the prevailing trend to be bullish. And I want a market to flush down to a zone of support that it has been sorely missing. So if we look backward on this last rally to the upside, the last rotation off the base was an L5. And when they finally broke out above the highs, they have an L1. Okay, well that's great, but typically the pullback is an L2. That's what traders are looking for, and they didn't get it. They got an L1. We break another high, they get another L1. Okay, well we break another high, they don't get anything, and we finally break away, and what happens, right? The market rips away and it flushes all the way down to where we are anticipating the market to flush down to. It's the L2. It's what we've been waiting for. So this is a great example of where the market flushes and it drops down into a major zone of support, and that zone of support is usually taking out some previous structure, maybe some stops, maybe something else inside of here. Now this one was a bit dangerous because it was kind of staring off the edge of a cliff. There's a big wide open space there. But the fact that it's been missing that L2 for days and days, going over the weekend, mind you, and then going on further, they finally got the pullback to the L2. It spent, remember these are 15-minute bars, so it spent that bar there, it spent 6 bars total testing it to some degree, 2 or 3 of which traded around it. So a lot of sideways consolidation if you zoom into a faster time frame, and you can break down into fractals and all of that. But this would be a great flush back to a zone of support that the market was missing. And to me, a flush is usually just a quick, decisive move that's trying to achieve an objective, breaking away from something else. And when you zoom out a little bit further, that breakaway is really nothing more than just a valued pullback in a larger structure, looking for continuation back up. So that's what I mean when I'm talking about a flush. A flush can be a million different things in terms of context, right? I mean, if you're looking back over here, this could very easily be a flush. And what would the context of this flush be? Well, it just came off of the backs of a really strong bull bar. Maybe the bulls tried buying in, they got absolutely dumpstered. That would make sense, right? And when the market comes back, where does it come back to? It comes back and allows them out at break even. Right there, we have our story. And it all started with the flush. I wouldn't have even looked at that location had that flush not occurred. So even though you might be approaching them in hindsight, they can still create major zones of interest. Now, in this case, this one is kind of flushing back to grab an L2, so we've kind of, job done. But along the way, there were also several other pulses where you could say, hey, this is a pretty obvious market flush, and a guarantee that a lot of buyers would be buying into that. And they arguably did get something going for a little bit, but when it finally broke through, now we're back at break even, which is probably why we're finding some resistance here. Ultimately, the L2 is the anticipated support line to grab at least back up to the top of L1, and that's the primary objective, which usually puts it at about a 2-to-1 or maybe even a 3-to-1 a little bit further. Great example of a flush where the market's really driving back and trying to grab something. Another really good type of flush would be a market that's trying to rush back and grab a POC that was left behind. So let's look back at this one. I don't know if this one actually has one. Of course, my data's bugged. That makes it so much easier. Okay, can't use that one, I guess. Let me creep forward here and see if it works. Okay. So like right here is an example where the market is ripping away and surging away. They finally have this quick flush, and it's a flush trying to grab a POC. This would be a lot easier of an example if my data wasn't bugged. But the market's rushing back. They're trying like, oh, please, they're sliding off the cliff. Grab my hand. They're trying to get out of the way before that alligator's mouth snaps shut. In that type of scenario, a flush could be a break-even run. It could mean a lot of different things, but the important thing is that there's context to it. It's running from something or running to something. It's trying to get something done. Hopefully you find that useful, interesting, and maybe that answers your question. I know it's kind of vague, but so are the markets. Really, if you were to back it off into a singular type of definition, a market flush is a parabolic move that is usually rushing towards an objective. That's probably the easiest way to put it, but generally, visually at least, it's pretty nice when it's obvious, nice and big. You know, there are a couple caveats to the overall story, but hopefully that does it. Of course, if you do have any other questions, you can drop them in the comments below, or you can drop them in Discord as well. And of course, if you have any other questions that you want answered like this, you can post them and I'll get them covered for you from there. But that's going to do it for this one. I hope you have a great one, and we will see you all in the next. Thanks.